Hello, everyone, and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day, and before we dive in today, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today's guest is the Director of Business Development at APMEX and OneGold, Mr. Patrick Yip. Happy to have you on the show.
Hey, thanks for having me on, Jesse.
So I want to start, like I do with all new guests, with their origin story. So what drew you to the precious metals space, and how did that ultimately lead to your involvement with OneGold and APMEX? And maybe you could break down those two platforms a little bit for us as well.
Sure. So I actually got my first gold coin back in 1988. So my dad gave me a 1988 1 ounce gold maple leaf. It was a brand new coin back then. I was a kid. I thought it was pretty cool. I didn't think much about it. I still have the coin today. It's actually my most sentimental coin. But my real journey actually began in 2008. So back then, I had your typical portfolio of stocks and bonds. I thought everything was great. And then all of a sudden, the financial crisis hit. And my portfolio got chopped in half like many investors. I then asked my financial advisor, like, what happened? And I recall him saying, like, no one could have predicted that crash. So that got me looking into a lot of research into myself, looking into Austrian economics, looking into precious metals. And during 2008, I actually noticed that gold initially corrected, but it ended up for the year too. So it actually avoided that financial crisis. So fast forward a little bit to 2011, I then joined APMEX. I'm the director of business development at APMEX and OneGold currently. If you don't know who APMEX is, we are one of the largest online precious metals retailers in the US. We've been in business for north of 20 years. We've done over 15 billion in retail customer sales. So these are going to retail investors like you and I. I've been with the company for 12 years now. I've held roles in merchandising, sales, project management, marketplaces, and now business development. Most recently, I began running OneGold, which is an online investment platform that allows customers to purchase a vaulted position of gold, silver, and platinum. And we could get into this later too. But OneGold has done about 900 million in transactions in its first 4 years of business. So it's definitely doing well too. And I was also led the efforts of launching the first ever precious metals rewards credit card, and it's called the Bullion Card.
That's fascinating. I certainly want to dive into all that, particularly the vaulted gold that one can purchase digitally. That's a concept that I've been speaking about with a few people recently. Peter Spino, we talked about that recently. It seems very interesting. But first, I do want to take a step back and get your macro outlook for gold and silver here in 2023. You know, we saw quite a rise in the gold price not too long ago. People were thinking maybe it was going to go back to all-time highs. Before it came down, we saw a large correction in both gold and silver. So what are your thoughts there, and how do you see the precious metals positioned here in 2023?
So right now, I am tremendously bullish on the precious metals, and I think there's a lot of similarities between today and the 1960s and the 1970s, which is the last time you had inflation at these levels. So if we take a look back in the 1960s and in the 1970s, you had inflation rising and the Fed trying to combat inflation by raising interest rates, which is what we're seeing today. Gold went from $35 in 1971 to $200 in 1974. What happened in 1974, you had a brief period of time where the Fed's funds rate was actually higher than the inflation rate. And what happened with it is gold crashed from 200 to 100. And many people thought the bull run was over. But an interesting thing actually happened also in 1974 is the U.S. went into a recession. So the Fed says, we need to get the U.S. out of a recession. Let's cut rates, which you're hearing right now. Is the Fed going to pivot? Are they going to start lowering rates? So unfortunately, at that time, the Fed cut interest rates way too soon, and inflation ramped up to about 15%. And then gold ran from $100 to $850. So where does that put us back to today? So right now, obviously, the Fed's raising interest rates. You're hearing that they're saying 25 basis points maybe for the next couple meetings. We'll see what happens exactly. I know we got a strong labor number too, which the Fed may increase rates a little bit more too. But my thought is, as you continue to increase interest rates, you're likely going to put the economy in a recession, which you're hearing a lot of economists saying 2023 is the year that the U.S. is going to go into a recession. I don't think that you're going to see exact parallels to the 1974s and 1975. I don't think metals are going to crash. And the reason why is inflation's currently running at 6.5%. The Fed funds rate is 4.5%. So there's still 200 basis points of a delta right there. You're hearing the Fed saying 25 basis points of increase. They're not unlikely going to get it above 6.5%. And as a result, gold is not going to crash. But I think when we do go into recession, and I think it's inevitable, I think it will happen at some time, whether it's this year, next year, it will happen. I think the Fed is going to pivot. And if we see something similar to the 1970s, maybe gold doesn't make that eightfold move up. Maybe it doesn't go to 100, 850. But I honestly wouldn't be surprised if it doubled or tripled from here.
So, what are you seeing on the retail demand side? Are people waking up to all of these facts that you've just presented? Are you seeing more and more people kind of turn to gold and silver as perhaps a safe haven asset, that traditional hedge against inflation? What are you seeing there, particularly with your business there at APMEX?
Yeah, so let's look at the bigger picture and then more so in recent months too. So 2019 at APMEX was one of our last years of, let's say, normal demand. We did about 1 billion in sales. You had about 73% of our asset mix was gold, and then another 23% was silver. So, and the rest was platinum and palladium and numismatics. And then fast forward to 2020, you had the COVID crash. We saw the number of purchasing customers go up by about 1.5x from 2019, and then sales more than doubled. And keep in mind, we were doing about $1 billion in retail sales, and doubling from $1 billion is not an easy task. And then what we saw too is the silver mix increase. So we were 23% silver in 2019. Now we got to 27%. So a lot more people are getting into silver. And then you move to 2021. We had the silver squeeze movement. As a result of the movement, we saw a lot of new customers becoming aware of precious metals. We got a lot of new customers we've never seen before, both on APMEX and OneGold. We easily smashed through that $2 billion mark in sales again. And then we saw the silver mix increase even further from 27% to 35%. And during that silver squeeze month, about 40% of our revenue was silver. So a lot of people getting into silver. And then you move to 2022, the demand continues strong. We actually had our best month in our 20 plus company year history in March and selling over $250 million in sales. And these are all retail sales to customers. And then now you look at 2023, and what we're seeing is demand is softening a bit. So it's not at the levels we've seen in 21 and 22, but it is still at elevated levels. And I guess the good news about this is with demand softening, it is causing product premiums to decline a little bit. And then lastly, getting onto that silver mix, we are still seeing about 30% of our revenue as silver. So, it still is at elevated levels, much higher than what we've seen in let's say, going back to 2019.
And what about on the institutional side? Do you deal with big institutions or perhaps other large clients who are purchasing larger amounts of precious metals? Have you seen any single purchases that have kind of, major eyes perk up for lack of a better term, that maybe you think should be on people's radars?
Yeah, so in 2022, we have had a few larger customers buy. Some of these customers place an eight-figure order, so this is north of $10 million. I can't give the exact dollar amount or the customers, but we are seeing large customers buy. But I think what's even more interesting is the demands across the different areas in the precious metals industry. So let's first look at central banks. So 2022 was actually their 13th consecutive year of purchasing gold, which these are the big players. These are the guys that set financial policies, right? In addition, 2022 marked a 55-year high in the amount of gold purchased by central banks in a single year. And like I said, these are the big boys, right? And if them buying gold doesn't get you to buy gold, then I honestly don't know what will. These are the guys that set all the rules. And now you look at ETFs, for example. An interesting thing about ETFs is you actually saw outflows in the GLD and SLV, which are the gold and silver ETFs, respectively. Both ETFs lost billions of dollars. But on the Sprott ETFs, they actually saw inflows in the PSLV. And then you look at the vaulted platform. So OneGold actually set a new record in assets under management and active customers. But unfortunately for some of our competitors, a lot of them remained flat or declined. And then lastly, on the physical side, we mentioned that APMEX is seeing record demand. So what does this all this mean for people? It's like there is clearly a run to physical precious metals. Central banks are buying physical precious metals. APMEX is seeing a lot of demand. For customers who want a vaulted solution, they're running to platforms with a credible backing, such as a Sprott PSLV or OneGold, which was founded by APMEX and Sprott. And they're becoming a little smarter. So they're running away from things such as the GLD and SLV, where the metal is not insured or where the metal backing is somewhat questionable.
Right. Now, I want to maybe have you expand a little bit on the central bank gold buying. That's been a hot topic these days. And I'm wondering why you think that's occurring. Some people are speculating there's going to be a whole reset of the monetary system and that central banks know about in advance, so they're accumulating gold. Perhaps there's going to be a gold-backed currency. We have talk of the BRICS nations potentially getting together to create a currency. Well, they have announced it that they're trying to move in that direction, backed by a basket of commodities or perhaps just gold. So what are your thoughts there on central bank gold accumulation? Do you expect it to continue throughout the year here?
Yeah, I do, and I think there's a couple reasons for that too. I mean, one is you're seeing that the U.S. is printing a crazy amount of money. I mean, there's stats, and the stats vary slightly, but they're saying half the money in existence has been printed since the pandemic, which to me is a little bit scary because if you hold dollars, it's like, well, what's a dollar worth if someone could just click a couple buttons and create more of them? And then another thing too is you have this whole thing with Russia and Ukraine, where the U.S. took Russia off the SWIFT system. And, the world reserve currency is supposed to be unbiased. And, if you're some of these countries, you're like, okay, well, this is supposed to be like the reserve, the safe haven, but then it clearly has a bias for and against certain countries. And I'm not trying to, say, which ones, but, it's just, you look at it, and if you were any central bank, you're like, okay, well, this is clearly not as stable as you thought. You could print more of it. Maybe the US takes you off a certain program. It's like you got to protect what's in your best interest. And gold, the nice thing about it is it's international, it's global. No one has the direct control of gold. There's demand for it all over the world. One country can't just manipulate the supply.
Yeah, so what are you seeing on the supply side when it comes to gold and silver? You spoke of the silver squeeze before, and during that whole movement, I think some people got overzealous. They thought we're going to drain the COMEX. We're going to create such an amount of demand that, silver for industrial use is going to start to become precarious. Tesla's going to want to buy silver. Apple's going to be looking at the silver market because there's going to be no physical silver to be had. So where do we sit today? What are you seeing? Are you having trouble sourcing gold and silver at any time? And where do you see that whole picture moving forward and its potential implications for, particularly with silver on the industrial side?
Yeah, so let's first talk about the retail side and then the wholesale side. There's a little bit of different dynamic going on both sides. So on the retail side, premiums are still high and some products are still hard to get. And it basically all comes down to supply and demand. So on the supply side, basically we had a stagnant precious metals market from like 2012 to 2019. So a lot of these manufacturers, a lot of the mints, they right-size their production, assuming the demand between 2012 and 2019. So like they're saying, I don't need all this extra capacity. They sold off equipment, right-sized their demand. And then when you go to 2020, as we mentioned, you saw crazy demand with demand more than 2xing. And then now you have all these mints, the manufacturers saying, okay, demand's twice the amount. They got rid of all their capacity. And that's creating a lot of supply chain constraints right now. But as I mentioned too, we are seeing retail demand a little bit softer in 2023, but still at elevated levels. And we are seeing some of the premiums decline. So that's what's going on in the retail side. The wholesale side, let's talk about the 1,000-ounce silver bar market. So that market is much tighter than it has been in a couple of years. And what OneGold and APMEX do is OneGold actually sources the 1,000-ounce silver bars, which are COMEX eligible bars. So we are taking metal off, like eligible metal off that could be put in exchanges. But we'll get into OneGold in a little bit more detail later. But we are buying a lot of this 1,000-ounce silver bars. Back in 2019, when OneGold first launched, we were paying about 3 cents per ounce over spot for the 1,000-ounce silver bars. Now we're paying about 30 cents per ounce over spot, which is a 10x higher in premiums. Right now, wholesale silver still is available to meet our needs, but you mentioned the silver squeeze earlier. There was a time during the silver squeeze movement where we tried to source 1,000-ounce silver bars from all our partners, all our wholesalers worldwide, and they said none is available. But what's interesting too is you're seeing the COMEX inventories decline in the last couple months. I think the real silver squeeze will happen, as you mentioned, like a Tesla or an Apple buy silver regardless of the price, because it makes up such a small percentage of their final product value. So there's like, I don't care if silver is $100, $200. I need silver to make my car. I need silver to make my iPhones. And it is what it is. And that's really what's going to cause a silver squeeze.
Yeah, right. It's such a small percentage of their overall cost. That kind of brings to mind uranium and the nuclear fuel cycle, and how a lot of these utilities and nuclear power plants will actually, end up paying for uranium regardless of the price because it makes up such a small percentage. So that's very interesting. I want to get your thoughts on the psychology around investing in gold and silver, because a lot of gold bugs and silver bugs don't even call it investing. It's really an insurance policy when it comes to the physical metal. And the digital version like you're providing with OneGold. So I'm just wondering, because I see it all the time in the comment section on my channel. I see it in comment sections on any discussion about silver and gold. You always have people in the comments who are saying, precious metals have done nothing for me. I've been sitting on them for 10 years. And, I put so much money into this, believing that these things were going to 10x or go to the moon. And now here I am stuck with this metal and it hasn't done anything for me. So do you view like physical precious metals more as an insurance policy and a hedge against inflation and perhaps against government overreach, etc.? Or do you potentially view it as an investment that one can actually make a profit on as well?
I view gold and silver as the ultimate form of money. Like you could choose to hold dollars, euros, Swiss francs, whatever you want to choose, or you could hold the gold and silver. I think the downside about, like we mentioned, with the US dollar, euros, British pounds, central banks across the world are printing money right now. So like what is it worth if the supply is always variable? Like if the supply is going to go up by 2x, 3x in the next several years of dollars, what's your dollar worth? I mean, the measuring stick is always changing. Whereas gold, you're pulling gold and silver out of the ground at like 1 to 2% a year. So the supply is extremely fixed. So I look at gold as basically money that cannot be manipulated by a central bank. There are, I mean, investments. I personally look at something that generates a yield. So if you're looking at like dividend paying stocks, cash flowing real estate, that's what I would say is more of an investment. But gold and silver to me is money.
Yeah, absolutely. Sound money. That's a great way to put it. So let's dive into OneGold now. I'd like to kind of get an overview of how the platform works, and perhaps you could address one concern, which is that, so many gold bugs say that if you don't hold it, you don't own it, right? And so I'm just wondering how that platform works in terms of securing the precious metals and ensuring that people who purchase gold or silver on that platform actually know that there is real physical gold and silver somewhere, whether it's in a vault. How does that whole system work?
Yeah, let me first start by addressing that statement. If you don't hold it, you don't own it. I actually first recommend that everyone have some physical precious metals. I think that should be the
Okay.
core of your savings. I mean, obviously, APMEX, we're one of the largest online retailers in the US. We'll sell you gold, silver, platinum, and palladium. I like the many upsides of holding physical. Obviously, it's tangible. It's off the grid. No one could hack it away from you. You could easily pass it to generation. Many upsides, right? However, there are downsides of physical precious metals. So typically, I tell people to buy some gold, buy some silver. It starts with a couple $1,000s, and this couple thousand of dollars turns into tens of thousands of dollars. And then if you're fortunate enough, it turns into a 6 or 7 figure sum. Unfortunately, this is not ideal. All it takes is one guy breaking into your house with a gun and your stack's gone. So back in 2018, we wanted to create a modern solution to buy precious metals, which addresses some of these downsides. And we like to offer different solutions. So if you like the physical, go with APMEX. If you're open to OneGold, try it out, right? But we partnered with Sprott, which is a large alternative asset manager out of Canada with about 22 billion under management, to come up with OneGold. Basically, like I said, a new and modern way to purchase precious metals. A lot of people call it like the Robinhood or Coinbase of precious metals because it's so simple and intuitive to use. So OneGold is a platform that allows customers to buy, sell, and trade vaulted positions of gold, silver, and platinum stored at various vaults, including the US, Canada, Switzerland, and the UK. We first start by having agreements. So we have an agreement with Brinks, with Loomis, with Royal Canadian Mint, and others. We then source the large wholesale bars, so 1,000-ounce silver bars, 400-ounce gold bars. We place it into these vaults. The metal is then listed on OneGold for sale. It's important to note that during periods of high demand, such as the silver squeeze, we'll actually pause sales because we don't want to sell an unbacked promise. We want to make sure that there's always a one-for-one backing, ounce-for-ounce backing. And then when the metal is purchased by a customer, it does not appear on OneGold's balance sheet. So it's owned by the customer. The customer has title. The prices are super attractive since you are owning a wholesale bar of gold or silver. We could sell you metal. We could sell you gold for as low as 40 basis points, so 0.4% over spot, and silver for as low as 1% over spot. All the metal is insured by Lloyd's of London, and it's regularly audited twice a year. And we post the inventory reports on our website. And the nice part about it is, if you ever want to take possession of your metal at OneGold, you could easily redeem it and swap it out for any of the 20,000 products available at APMEX.
That's interesting because that was going to be my follow-up question was how does one take delivery of their precious metals? Because, the Sprott ETFs, which you touched on earlier, are great in that they have physical gold and silver backing them, but the dollar amount, the value amount that you need to own in those ETFs if you actually want to take delivery is far beyond what your average retail investor would ever have in there. So could you maybe break down a little bit more how that works in terms of actually redeeming the digital side of things to actually get delivery of the physical metals?
Yeah, so OneGold allows that redemption for any of the positions at OneGold for any of the 25,000 retail products at APMEX. And in fact, many of the leaders at APMEX, and myself included, are actually using OneGold for a little arbitrage opportunity right now in silver. So retail premiums, as we mentioned, are at multi-year highs. For example, Silver Eagle's $12 over spot, which to me is just, I personally wouldn't buy a Silver Eagle for $12 over spot. But premiums on wholesale products, so the 1,000-ounce silver bars, have not been affected as much. So what a lot of people are doing, like I said, myself included too, I'm buying a position in OneGold. I'm paying 1% over spot for silver. So basically like, let's say 25 cents right now. I'm then waiting for premiums to normalize, which I think they eventually will. That's what a lot of people in our industries are saying. Premiums will normalize over time. I can't tell you if it's going to be 6 months from now, a year from now, or 2 years from now. But then I'm swapping my position at OneGold for the product I want, whether it's 100-ounce silver bars, Silver Eagle, Silver Maples. And the only thing I'd really pay is the premium difference between that pooled metal, which I have at OneGold, basically like the allocate, like it's allocated, segregated, but it is pooled since I'm owning a part of a 1,000-ounce silver bar, into whatever retail product. So let's say Silver Eagle premiums are $5 down the line instead of $12. I'm now paying only $5 over spot instead of paying $12, but I've had my exposure to silver in the meantime. I think another thing to consider too is when investing, especially in silver, one of the last things I recommend is you pay a crazy premium. So silver, for example, is $23 right now. Let's say you paid $12 over spot and you got a Silver Eagle. You paid $35 all in. And now let's assume silver went up. Silver is now 23. It went up to 30. Hey, you made the right call. Great. But premiums normalized. They fell to $4. So that Silver Eagle that you paid $35 for is now worth $34. So, not what you want. So my recommendation is get in OneGold, get the exposure to silver right now, and then follow premiums. When they're lower, get the product you want.
Very interesting. I want to ask a bit more of maybe a philosophical question next, and that is the role of gold and silver in potentially returning to sound money, whether that be a gold-backed currency or whether it be through platforms like OneGold. Do you think we could ever eventually see a return to a gold standard, and could a platform like OneGold help facilitate that eventual return to sound money?
Yeah, when you bring up sound money, what's interesting with any fiat currency, I think any fiat currency will go away. However, just because, and Rick Rule's I follow him, he's actually been here to our offices here, met him in person too, but one of his sayings is just because it's inevitable doesn't mean it's imminent, right? So, maybe the dollar goes away in my lifetime. Maybe it's my son's lifetime. Maybe it's in his kid's lifetime. I mean, we don't know, right? But regarding OneGold being I guess, assisting in that return to the gold and silver standard, we're always looking to innovate. And, you have a couple companies out there that have launched a precious metals debit card. And the thought behind that is you could spend your precious metals and make your own gold and silver standard. But we did a survey back then and we said, hey, do customers even want to spend their gold? And we found that people said, no, they want to accumulate their gold, not spend their gold, right? It's like, I'm not selling my gold. So we looked at it too. And there's Gresham's law that says, good money drives out bad. In the 1960s, you had silver coinage in the US go from silver to clad. People kept the silver, they spent the clad, right? So we thought, okay, well, we're not going to launch a debit card. Let's launch a credit card that allows customers to earn precious metals as they spend, and that's the bullion card. Maybe at some point we launch the debit card where people get to make their own gold standard and spend their gold. But right now I don't think there's demand for it. But if there's ever demand in the future, you could count on APMEX being there to support customers.
Well, talk a little bit more about the bullion card. That sounds fascinating. How does that work?
Yeah, so it's actually right here. I have it on my desk right here. So it's called the Bullion Card. It's the first precious metals rewards credit card. So it gives you 4% back on APMEX and OneGold purchases, 1% back on all your other purchases, 15,000 bonus points, which has a $150 value after spending $1,500. So in fact, I got the Bullion Card. I haven't got a credit card in over 15 years. I bought an ounce of gold on OneGold, got my $150 back. I bought it well below spot, which I'm not going to complain. It offers 0% APR on purchases for 12 months and 0% APR on balance transfers for 12 months as well. There's actually two different options. So if you apply for the bullion card using your APMEX account, you get points which are redeemable for any of the 25,000 physical products available at APMEX. You can redeem your points in any dollar amount at any time. And then the option I did is I applied for the bullion card on the OneGold site, which since OneGold is selling fractional metal, so we could sell metal in 0.001 ounce increments. So if I go to Target, I go to Costco, I buy gas, wherever I go shopping, I earn points, and then I could select whether I want gold, silver, platinum, and whether I want it in the US, Canada, Switzerland, or London. And then it automatically allocates it. So I could buy, let's say I fill up my car with gas and I get, 0.001 ounces of gold or whatever the calculation is. But, so at OneGold, it's a set it and forget it plan. But if you're interested in that, there are two links. The APMEX link is thebullion.apmex.com, and the OneGold link is thebullion.onegold.com.
Great. I wanted to touch a little bit on the massive correction we saw last year in the cryptocurrency space. And if you think some of that speculative money may flow into the gold and silver sector, because it seems like a platform such as OneGold could be appealing to the crypto bros who've lost a bunch of money here through these online platforms that really didn't have what they say they had and ended up losing all their crypto. People were looking at these yields that were just not realistic when you really think about it. If it's too good to be true, it is. So do you think we might see some of those people turn to the precious metals and a platform like OneGold to perhaps, deploy their capital instead of putting it in the crypto market?
Yeah, I get that question a lot is whether it's gold or cryptos. And my thought is gold has been around for thousands of years. Different cultures, different countries have always valued it. Cryptos, on the other hand, have only been around since 2008. I believe Bitcoin's the oldest cryptocurrency. We unfortunately don't know how cryptos are going to react in a rising interest rate cycle. I mean, so far they're not doing so hot. In addition, we don't know how they're going to react in a recession. They just don't have that data point. My hope is for precious metals to eventually get more mainstream demand, and I think a modern platform such as OneGold will definitely help. But another thing you mentioned too is the crypto crash. And sometimes I also get asked like, hey, is gold too high, or am I too late to get into gold? And it's really funny to see how history repeats at market tops. So in 2000, one of the most popular Super Bowl commercials was the Pets.com Super Bowl commercial. I don't know if you remember that, but the .com bubble shortly burst after there. And then fast forward several years later, 2022, what was the hot Super Bowl commercial? Crypto.com. And what happened? The cryptos markets crashed. So, I tell my friends like, hey, if history repeats, gold's not going to be at a top until you see some precious metals related commercial on the Super Bowl.
Yeah, right. Until we have a gold and silver Michael Saylor, as my friend Patrick Karim likes to say, when will we see that guy? And then you might know we're close to a top. Well, Patrick, thank you so much for joining us today. For those who want to learn more about OneGold and APMEX, and maybe if you have any social profiles yourself you want to direct people to, where's the best place to go online?
Yeah, first of all, I would definitely recommend that everyone buy some precious metals. I think we're going to be facing interesting times. I would say your allocation shouldn't be 0%, nor should be 100%. There is an area that you probably feel comfortable with. If you like the physical metal, check us out at APMEX.com. That's APMEX.com. And if you want the vaulted metal, or you want basically a simple way to get involved in precious metals, check out OneGold.com. That's ONEGOLD.com.
Great. Well, I'll put links to both in the description below so people can check them out. Thank you so much, Patrick, and look forward to having you on again in the future to continue the conversation.
Great. Thanks again for having me on.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.